Hello to everyone. I'm Dina from Faculty of Organization and Informatics, Varaždin, University of Zagreb, and I'm glad that as part of the 4th International Business Information Management Association conference, I can present the paper The Behavior of Institutional Investors on the Croatian Financial Market, a study at the Zagreb Stock Exchange, prepared in co-authorship with my student Vlatka KOLEMBUS. This is the agenda of the presentation that I will present in the next 15 minutes. The subject of this paper is to analyze the behavior of institutional investors on the financial markets with a focus on the example of the Republic of Croatia in the context of the traditional or behavioral approach to finance as significant indicators for investment analysis and portfolio management. Accordingly, goal of the paper is to identify, present, and evaluate the paradigm of behavior of institutional investors on the Croatian financial market. That is, to find out whether they act dominantly according to the traditional approach, whether the influence of behavioral factors on investment decision prevails, or whether the practices are evenly divided between these approaches. According to proponents of the traditional approach to investor behavior, economic intermediaries are homo economicus. That is, people who strive to maximize their interests by making fully rational decisions based on all available information, which is why financial markets are fully efficient. Following the rationality of factors and efforts to maximize utility, and within the framework of the traditional approach, numerous models and theories have been developed whose purpose is to facilitate the making of investment decisions. Among them, the modern portfolio theory, the capital asset pricing model, and the efficient market theory should be highlighted. The assumptions on which the theories and models of the traditional approach are based are often unrealistic and invalid. Critics of the traditional approach believe that the investor's final decision depends on the situation in which it is made, which is often characterized by incomplete and/or inaccurate information, and on various psychological and sociological factors under whose influence is the investor. This determines the change in perception of rationality from complete to limited, and Homo economicus, the main character of the traditional approach, is replaced by Homo sapiens, an agent whose decisions are by no means and by any criteria almost always rational, because he is under the influence of various cost restrictions, overloaded information, and the like. Criticism of the traditional approach and the appearance of anomalies, the deviation from previous economic theories and models, resulted in the development of behavioral economics, a new direction in economics that seeks to expand and improve rather than refute the traditional approach on which neoclassical economic theory is based. Proponents of behavioral economics believe that in addition to economic and general social factors, investor behavior is influenced by behavioral social factors that include heuristics, biases included in prospect theory, the herd effect, and market factors. There are numerous studies focusing on the consideration of the compliance of investor behavior with the thesis of the traditional or behavioral approach. Most of them suggest that investment decisions are not only based on traditional financial theories, but are also influenced by behavioral financial factors. Based on the literature review, as well as the defined subject and the set goal of the paper, our research task was determined, which consists in testing the following hypotheses. Behavioral practices of institutional investors on the Croatian financial market are divided, with a predominant influence of behavioral factors. In order to test the initial hypothesis, an empirical study of the behavior of institutional investors on the Croatian financial market was conducted. The research population consisted of all institutional investors on the Croatian financial market, the Zagreb Stock Exchange, the list of which is given in Table 1. Data collection was carried out using the survey method, that is, a survey questionnaire as the main research instrument. The survey questionnaire was created using the Google Forms tool and consisted of 38 questions and statements that were divided into 3 sections. The sections are further divided into groups. The survey questionnaire was sent to the email addresses of the entire population. The invitation was sent on 2 occasions, and the survey questionnaire was open in the period from July 26 to August 9, 2021. The total of 5 responses were collected in that period, which indicates a response rate of 38.46%. For the analysis and description of the results, and for testing the research hypothesis, the methods of descriptive statistics were used. Demographic and business characteristics of respondents, that is, institutional investors, in the sample are shown in Table 2. The second section of questions refers to the traditional approach and contains questions related to general information about the approach and theories and models of the traditional approach, modern portfolio theory, capital asset pricing model, and efficient market theory. The results related to the second section are given in Table 3. The third section of questions refers to the behavioral approach and behavioral factors that influence investment decisions and contains questions that refer to general information about the approach and behavioral factors, heuristics and biases, representativeness, availability, anchoring and adjustment, self-confidence, and avoidance of regret. Prospectarian biases, loss aversion, regret aversion, mental accounting, emotions and self-control, and framing. Herd behavior and market factors. The results related to the third section are given in Table 4. Analyzing the answers to questions and statements related in general to the traditional approach and the theories and models within it, it can be seen how the views of institutional investors are divided. Namely, while on the one hand, investors as rational agents, as a rule, choose a less risky portfolio between 2 portfolios with equal returns and are focused on one holding period in which they try to maximize the expected utility of the final wealth by choosing between different portfolios based on the expected returns and standard deviations of each portfolio. On the other hand, they generally do not seek to collect all relevant data and information, are not averse to risk, and do not agree with the basic thesis of the efficient market theory. Furthermore, based on the results of the analysis of answers to questions and statements related in general to the behavioral approach and behavioral factors that influence investment decisions, it can be concluded that although the attitudes of institutional investors are sometimes divided again, as in the case of the traditional approach, the behavior of institutional investors is to a greater extent in accordance with the characteristics of the behavioral approach. Specifically, the results of the research indicate that the majority of institutional investors on the Croatian financial market are quite self-confident, which indicates the presence of this heuristic. The availability heuristic and the anchoring and adjustment heuristic are equally present and not present among the surveyed institutional investors. Finally, the representativeness heuristic and heuristical regret avoidance or gambler fallacy are not recognized as present in the practice of institutional investors on the Croatian financial market. Regarding the prospect theory, one can notice the existence of loss aversion and regret aversion in institutional investors, the presence of the phenomenon of separation of transactions, that is mental accounting, the existence of a strong influence of emotions on the investors, and the self-control associated with them. and the presence of framing when making decisions. As for closely monitoring the behavior of other investors, herd effect, it is not present to a large extent in the surveyed group. Of the market factors, price changes and information from the market have the greatest influence on the respondents, while previous market trends are not of too much interest to institutional investors on the Croatian financial market. Finally, considering the division regarding the presence of features of the traditional approach and the higher percentage of behavioral factors that are present among the examined institutional investors on the Croatian financial market than those behavioral factors that are not, it is concluded that they are more behaviorists than traditionalists. However, despite the moderate dominance of elements of the behavioral approach, the present appreciation of certain concepts of the traditional approach among institutional investors on the Croatian financial market should not be ignored. Accordingly, it is recommended that they resort to a combination of traditional and behavioral approach, especially in situations characterized by anomalies and deviations from the assumptions of the former approach and behavioral biases as a result of the latter. The scientific contribution of the research is primarily reflected in, on the basis of related studies, an independently created survey questionnaire used for data collection. Secondly, the contribution comes from the fact that this type of research is generally rare and has not been carried out on the sample of Croatian financial market. Thirdly and finally, the empirical results related to institutional investors on the Croatian financial market are comparable to the results of related studies conducted for financial markets with similar but also different characteristics. The applied contribution of this paper is manifested in raising awareness of the behavioral paradigms of institutional investors on the Croatian financial market and providing indication of the impact of their behavior and investment strategies on their own performance and market events. In addition, the institutional systemic implications of the research results are manifested in the help provided to the Zagreb Stock Exchange and Croatian Financial Services Supervisory Agency in the creation of policies and regulations taking into account the anomalies and distortions caused by the behavior of investors. In accordance with the general goal, and by deriving the answers to the questions or statements from the survey questionnaire, the paper tested and confirmed the hypothesis that the behavioral practices of institutional investors on the Croatian financial market are divided, with the predominant influence of behavioral factors. In other words, institutional investors on the Croatian financial market are predominantly behaviorists who respect and apply certain concepts of the traditional approach. Respecting, on the one hand, the shortcomings of the traditional approach, which are manifested in the form of anomalies in the conditions of the real world, and on the other hand, the criticism of the behavioral approach, the symbiosis of the principles of the traditional and the behavioral approaches, with a moderate dominance of the latter, can be conditionally characterized as appropriate. Conditional adequacy presupposes and requires institutional investors on the Croatian financial market to respect the assumptions of the traditional approach and to correct them with regard to observed anomalies, while at the same time being aware of and amortizing behavioral biases and their influence on investment decisions. Acknowledging the earlier apostrophized scientific contribution, an institutional systemic implication of the research, it is necessary to refer to the limitations and problems in the research. The fundamental limitation of the research is the sample size, which, however, is primarily determined by the size of the population. Namely, although the response rate observed is relatively satisfactory, in absolute terms only 5 out of total of 13 institutional investors participating in the Croatian financial market responded. Furthermore, although valuable, The originally created survey questionnaire was not previously tested, which carries with it the risk of an inadequate design for testing the desired particles. Finally, testing the hypothesis was performed exclusively using descriptive statistics methods. Consequently, future research should be channeled toward mitigating or eliminating the aforementioned limitations and problems. Thank you for your attention.